Good morning, everyone, and welcome to Ask the Expert, an award-winning daily series from 8:30 a.m. to 9 a.m. to help small businesses just like you. If you have any questions, ask them in the comments of the live feed. If you need any more advice, join the official Intuit QuickBooks SMB community group on Facebook. Accountants and business experts just like myself are on hand 24/7. During the live stream, we'll be running a poll, so please do engage with it, and we'll reveal the results at the end. The virtual, it's certain, sorry. Okay, so who am I? My name is Aaron Patrick, and it's a pleasure to be with you again. And I am a chartered accountant. I'm also a QuickBooks certified trainer with a fancy new logo, so don't be afraid to ask me any QuickBooks related questions. I own a state-of-the-art accounting firm called Boffix, which is just up there, which uses the best cloud technology available to help small businesses just like yourself get crucial real-time information they need at their fingertips, and more on why that's important later. If you require accounting advice, payroll, bookkeeping service, and even QuickBooks online training, then please do get in touch. We want small businesses not just to survive, but to thrive. I also have a dedicated QuickBooks YouTube channel called Aaron Patrick, the QuickBooks chap. So if you need any more QuickBooks news and advice, then why not go over there and give the channel a follow. Okay, enough about me, and let's focus on today's session. As always, this session is all about you and your burning questions. If you have any questions, then please use any of the social channels to get in touch. So while we wait for the first of the questions to arrive, let's talk about the issues that our clients are currently facing. Now, it's been just over a week since the budget, and here on Ask the Expert, we've done a great job in keeping you up to date, but it's far from over. So I thought I'd give you a refresher on the budget itself, but more importantly, I want to focus on how QuickBooks can help you with the budget. What features has QuickBooks got that's going to help you make sure that you don't come foul of any of these new budgets and get caught out by any unwanted taxes? Sounds good? Well, let's get straight into it. So first of all, let's talk about some of the bits that have happened, not just in the budget, but just to keep you up to date. So the first thing is that business rates holiday has been extended, which is pretty important to a lot of business out there, I know. The Chancellor avoided the whole cliff edge scenario by announcing that another business rate holiday will be extended until the end of June. So you've got until the end of June before any business rates are going to become due. After that, business rates will be discounted, and then you'll be able to make sure that you don't have to hit that full version of the business rates straight from the off. There's also, just a quick update, the VAT cut to 5% for hospitality and tourism business will also remain all the way up until September. So that's great news. And after that, it will increase to 12.5% before returning to 20% in April 2022. And if you think about it, that's where QuickBooks already shows you what it can help you with. Because if thinking about how you're going to understand what 12.5% is working backwards. So if you think about the fact that you may need to work back from you've had or paid a particular amount of money, and you need to figure out how 12.5% VAT is working backwards. Well, that's one of the reasons why QuickBooks has got you covered. Within QuickBooks itself, you can put on inclusive of VAT tax rates, put 12.5% as one of the new ones, and it will be available, I'm sure, from QuickBooks themselves. And then that's going to go ahead and calculate the VAT for you without you having to go for that calculator and try and work it out manually. So there's just one of the quick ways we can use QuickBooks to help. Moving on to some other news of what's happened. We've had the restart grants that have been announced, which is going to help the high street reopen. So the government has announced this 5 billion grant scheme for England to help high street businesses reopen after lockdown. Around 700,000 businesses will be eligible for the grant, including shops, salons, gyms, and restaurants. As non-essential retails opened earlier, grants to those businesses will be worth up to £6,000, with hospitality opening later. Individual businesses could receive as much as £18,000. Head over to your local authority, so your council and everything like that, for more information. Furlough has also been extended until the end of September, so that's great news for all businesses out there who have been using the furlough scheme. The The CRC, the Coronavirus Job Retention Scheme, or furlough as everyone calls it, was initially designed as a short-term measure to protect jobs and livelihoods, but the government has thankfully announced that this will now run until September 2021. If you employ people that have been furloughed, note that the support will be tapered, so we're not going to get that full 80% contribution all the way until the 30th of September. You'll need to contribute 10% towards hours that staff don't work in July and increase into 20% for August and September. So think about the fact you're not getting 80% paid back to you, even though you're going to be paying 80% to your staff. You're going to get 70%, and then it's going to drop down to 60% as well. So get using that cash flow planner that's in QuickBooks. This is where QuickBooks becomes an absolutely invaluable tool for people, because it's going to be really useful for you to be able to understand exactly how those tapered reliefs or those tapered furlough is going to affect you and your business. So what I would really recommend you do is start getting used to how that cash flow planner that's built directly in QuickBooks uses or is used. So how does QuickBooks help you in this scenario? Well, the cash flow planner itself is designed to predict the next 3 months for you without you having to do anything. It basically analyzes your bank account, has a look at what your trends have been over the last couple of months, and then it goes, right, let's try and predict what the next 3 months are going to be. And that gives you a great baseline. That's going to be your baseline of what you expect your cash flow to be. Furthermore, you then have the ability to go in and add transactions that only affect the cash flow planner. So what you can use that for is a way of starting to guesstimate and start to see how different scenarios are going to affect your business. And that's perfect for planning furlough, isn't it? If you think about it, you're going to have the ability to be able to plan for how those drops in the contributions are going to affect your business. So as we move from having 80% of that furlough being paid to you, going to 70 and then 60, you can see and map out how that's going to affect your cash flow, giving you an opportunity to plan accordingly. So I really do give a chance everyone to try that cash flow forecasting tool, see how easy and intuitive it is, and then start using that to plan your way out of furlough and out of the fact that we're coming out of lockdown. There's also been news about the wider eligibility for self-employment income support scheme. So that's good news for anyone who has been utilizing that scheme. The self-employment income support scheme has now been extended for a 5th grant covering June, July and August. But, and this is the real big bit that we need to remember, the 5th grant will be more targeted. Those whose turnover has fallen more than 30% will still be eligible for 80% of the average monthly profits, just like before, up to 7,500. Those who haven't been affected will be eligible for a grant worth 30% of their average monthly profits. So eligibility for the 4th and 5th grant is also wider. If you submitted a 2019-20 tax return by the deadline, then you will be eligible, which means that more people are going to be eligible than it has ever been before, which is obviously great news. How can QuickBooks help you with this? Well, QuickBooks itself has the ability to be able to predict your tax return and also tell you what your tax return was going to be. So if you're trying to figure out if your tax return has changed, has been affected, or if it's going to be eligible for this, then QuickBooks is going to have you have the data you need to be able to make that chance or look at that idea yourself. Also, you're going to have that chance to use that cash flow forecast, as we said before. So you're going to be able to see that when those grants are due to come in, how that's going to affect your cash flow. And again, you get the opportunity to plan accordingly. Use the tools within QuickBooks to your advantage. One of the things I keep talking about on my QuickBooks channel is all about how there's no real benefit for you just throwing data into QuickBooks for making sure that your tax return or your VAT return is completed or your statutory requirements. Your biggest benefit you're ever going to get out of QuickBooks is by using all that data you've been having to put in there for your benefit, for your business. So using cash flow forecasts, using budgeting, using those ways in which we can make sure that our business is going in the right direction. Okay, then we've got the big parts of the budget. So we've talked about how we've had the ability to understand exactly what's going on with reliefs and everything that was announced on the budget in terms of helping businesses and supporting businesses. But what about the future? What about what's going to happen with taxes? Well, we do have a corporation tax increase. I'm afraid to say, but it's not until 2023. So we do have time to act and time to figure things out. So the Chancellor has announced an increase in corporation tax as you step towards paying for the government's response to coronavirus. The rate of corporation tax on company profits will increase to 25%, but with some crucial projections and protections. The new rate won't be introduced till April 2023, so that's one of the big parts. And also small businesses with profits of £50,000 or less will continue to pay the current 19% rate. So if your profits are below £50,000, then you're going to be continuing to pay the rate that we currently pay out. The rate will then be tapered up depending on your business profits. Only business profits with more than £250,000 will pay the 25% to that new higher rate. The Chancellor says this means only 10% of companies will pay the 25% rate. But don't forget a few things that are going to be crucial to this calculation. The first one is about associated companies. So that whole £50,000 limit and £250,000 limit sounds absolutely brilliant. And obviously, as a business, it's something that you're going to want to work towards. You're going to want to keep those in mind so that you can make sure that you are paying the fair amount of tax. Now, one thing to bear in mind there is that if you have associated companies, now by association, that means that you own more than one company. There's various rules, there's various elements that you're going to have to take into account. But the whole idea or the whole concept is if you have more than one business that you're in control of, then those rates and those thresholds of £50,000 and £250,000 will be reduced by how many companies you have. So, for example, if you had two companies, it's not £50,000 you're working towards, it's £25,000 that you're working towards. And it's really important that you understand and figure that bit out. And this is where QuickBooks can be really, really important for you, because think about it, you're putting real-time information into the system. Therefore, you're going to be able to figure out what your profit levels are going to be at any point in time. And the more real-time information you have, the more decisions you can make about how your business is going and what the final outcome is going to be, ultimately what the final tax figure is going to have to be paid on. So it's going to help you for planning for saving for that tax bill, and also gives you a chance to think about other things that you could do or help to be able to change the way that that final profit is done. Maybe you need to increase salary in your own directors. Maybe you need to look at investment. Whatever that's going to be, having that real-time information, knowing the information before it happens, is the way in which you're going to be able to be better prepared for these tax changes that are coming. So use this opportunity to make sure you're using all the tools within QuickBooks. Make sure your bank's connected. Make sure you're using the receipt capture. Make sure you're using all the features that QuickBooks have got, integrations and everything else to make sure that your data is being brought into QuickBooks on a real-time basis. If you can get your data into QuickBooks real-time, you're going to know what your profits are. You're going to be able to act accordingly with all these new changes. So use QuickBooks for what it's designed to do. And finally, on the budget, our last bit is the new Super Tax Deduction for companies investing in plant and machinery, which will cut companies' tax bill by 25p for every pound they invest in new equipment. Taxable profits can be reduced by 130% of the cost. And remember this phrase, eligible plant and machinery. That's going to be the most important thing for you. If you are going to buy a piece of plant and machinery and it's eligible, then you're going to get a really nice extra deduction on that particular asset. And that's going to help you and give you confidence in buying new property or buying new plant and machinery, should I say, and giving you the opportunity to be able to get an investment benefit for doing that. With that, I'd highly recommend an app on the App Store called Net Tracker. That's going to be the best way to keep on top of all of your fixed assets and make sure they're going from there. All right, with that then, I think we're going to move over to the questions. Just as a quick kind of a side note though, on my YouTube channel, I have just done a big video on what was announced on QuickBooks Connect. If you didn't know, QuickBooks Connect was just over a week ago, and it's when all the new features in QuickBooks was announced. Highly recommend you go over there. A quick spoiler of what was announced though, QuickBooks Business Accounts is on its way, and it's going to completely revolutionize the way that we're going to deal with QuickBooks going forward. So I'm going to definitely do a big deep dive on that when I have access to it. We can accept bank transfers as a way of payment on your sales invoices. That's going to be huge for making sure you get paid on time. And T-Sheets is now QuickBooks Time. and we're going to make sure we do a deep dive in those upcoming videos, and so much more planned for 2021. So do get yourself over to my YouTube channel and we can talk about everything we've got regarding QuickBooks and the way that it is going. All right, then, remember, this show is all about you and your burning questions, so let's get straight onto them. So we've had some brilliant questions coming in already. Let's go for Casey from Instagram DM says, are there any grants, loans which can help me with starting up my new startup as a salon/hairdresser? Great question there, Casey. And yeah, when it comes to actually making sure that you have the ability to be supported during a time like this, there are many grants, loans available to you. Now, the best place to go to for any individual grants and individual loans is your local authority, because if you head over to your local authority, so that's your council, that's when you're going to see that there's a lot of grants that have been prepared and done on a local level, and that's going to be the one that's going to help you the most, especially with the fact that you're going to have to think about, you know, a property or a rental or whatever it's going to be. Then those sort of grants and schemes and everything are going to be best for you. Also, as a startup itself, there is also other elements that you can use to help you. So we have loads of schemes that have been designed to try and help it so that you can be supported in bringing in, say, staff members and things like that. So there's a Kickstart scheme, there's the apprentice, the way the apprentice scheme's been changed, and items like that is all designed to try and kickstart the economy and give the ability to make it so it's even easier for you to bring on new members of staff, or at least give opportunity for staff members to be trained. So I really do highly recommend you have a look at both of those ones and keep an eye on your local authority, because that's going to be the best place to go. When it comes to funding and everything else like that, then do also have a look at some of the other elements out there. There's Funding Circle, there's all those sort of people where it's all about making sure that your good ideas are being rewarded and that investment comes your way. I highly recommend a look at that, and don't be put off by what's happening. You know, I know a lot of businesses, especially for our client base, where they've used this opportunity to maybe try a different business model that they've not tried before, drum up a new business, whatever it's going to be. And a lot of people are using this opportunity to start their own business. So don't be put off by all the doom and gloom that's out there. I do highly recommend that with the right advice and the right amount of opportunities and the right grants and everything else that's there, I think you should have a really good chance of creating yourself a brand new business. Lowell from Facebook Messenger asks, morning, Aaron. I was planning to get my employees back from furlough and starting work full time. Excellent news. Is there any financial benefit to keep a few of them on flexi furlough, or should I aim at preparing for reopening the business and making the best of a lifting of lockdown restrictions? And that is a great question there, Lowell. And I think when that sort of question is brought in, this is where items like on QuickBooks, the ability to use your cash flow forecast is really beneficial, because this is where you're going to start having the opportunity to show predictions and how that's going to affect ultimately your cash flow, what's going to happen, everything else. But just bear in mind what the flexible furlough was designed for and how it's been implemented is all about giving you that flexibility. Because we know that when you come to starting straight back from lockdown, your business is going to be different. It's either not going to have as many customers coming through the doors because of restrictions, or it's going to be one of those cases where you're going to have to start building back up the ability to get your customer base back to where it was before. Either way, that's what flexible furlough is all about. So normally it's not a case of what's most benefit as a one shoe fits all, but it's all going to be designed to you and your business and how your business is going to react to coming out of lockdown. If your business is reacting positively to it, then it does make sense to bring as many staff back, get yourself back up to those numbers that you were pre-lockdown. But obviously, if your business is going to take that time to start rebuilding itself, and it's going to have that staged response due to the restrictions, due to whatever it is that's preventing you to getting back to those numbers pre the lockdown, then that's when flexible furlough becomes an absolute lifesaver, giving you that opportunity to be able to bring people back in a staged, safe and responsible way of doing it. And that's exactly what flexible furlough is all about. Hopefully that's answered your questions there. Scar Sells from Facebook Live asks, hi Aaron, just wondering, does the global accounting scheme need purchases and selling invoices for all the items purchased and sold? Great question here. So for anyone out there that doesn't know what global accounting scheme is all about, then basically the simple way of thinking about it is that if your business is buying and selling items and you're VAT registered, then normally you get the opportunity to take VAT from what you've bought and then you add VAT to what you've sold. And the idea of a business is you shouldn't be affected by VAT. So when it comes to businesses that don't have the ability to claim VAT on what they've bought, maybe it's because they're buying from, say, secondhand goods, or they're buying from somewhere that isn't VAT registered, then at that point, they're going to have a disadvantage to other businesses who do buy from people who are VAT registered, claim the VAT back, and then pay the VAT over. So, so with that in mind, when it comes to the global accounting scheme, it was all designed to make sure that you as a business feel supported and you as a business are treated very similarly to how those other businesses are. And this whole scheme is designed to make sure that if you try and take one business who is claiming VAT from their purchasers against another business who isn't able to claim against VAT from their purchasers, then they should be treated similarly. Now, for that to work, the scheme itself is all designed to make sure that instead of you having to pay VAT on your final sales point, you pay for it only on your profit. And this can be a massive game changer for certain businesses, certain VAT registered businesses that is, that are utilizing the scheme. Now, the rules and regulations of what you need to do to keep compliant and everything else are relatively straightforward. It's all about making sure that you have a way of being able to showcase to HMRC what it is that you've bought, so making sure that you've recorded those transactions. Now, if it's a case that you've bought off a private seller, then you need to be making sure that you are showcasing that in one way or another by taking a photo, by asking them to complete a purchase invoice, something along those lines, just to have some proof. Take a copy of your Facebook marketplace or whatever it is, your eBay listing, whatever it is that you bought it from. Just make sure that you've got a way of being able to proving that you've bought that particular item. And crucially, that's going to make sure that people know that that didn't have VAT on. If that's the case, then it's all about keeping an eye on your sales going forward. And you just need to be able to make sure that you are putting them into different pots. So if you've sold an item that originally didn't have VAT on in the first place, then that goes into your global accounting calculation pot. If you're selling an item, though, that wasn't able to be able to put in there, then unfortunately, then that goes in a different pot and is dealt with in your standard way. Once you've got all of that all in place, sounds a bit complicated, but I promise you it's not too complicated. And we do have videos on this subject. Then you'll be able to do your calculation from there. Now, my further tip for this one is we do have a QuickBooks webinar on, I think it's going to be next Thursday, I believe, and it's all about the global accounting scheme, partial exemption, and everything there. So if you have any of those issues and you want to use QuickBooks to do that, I do highly recommend jumping on one of those webinars going forward. So have a look at those webinars, use my resources as well. But ultimately, for the question that's been answered there, you do have to keep records and make sure that those records are put directly on QuickBooks to make your life easier. We've got Joanne from Instagram DM asking, what is the help to grow scheme? Will I be able to get grants under it, or is it the same as the restart grant? So these are two different schemes and they're going to be independent of one another. And basically the whole premise of these is about making sure that when it comes to restarting and making sure you're coming out of lockdown, that you have support going forward. One of the things that is definitely apparent to going from being in lockdown to quickly getting yourself ramped back up again is that there is a lot of costs involved. And there has been costs and there will continue to be costs. Trying to make sure that your business premises is COVID secure, trying to make sure that you have that ability to be able to fund and get back up and running again from those pre-expenses to having pre-COVID expenses to where we are now. So the whole point of all of these schemes is in mind of the idea that you're going to experience probably some cash flow issues to get yourself back up to where you were before. And that's what these grants are all about. Thomas from Facebook Messenger asks, hi Aaron, the Chancellor announced a super deduction tax rate for businesses investing in equipment from April 2021 onward. What if I have already placed an order for an equipment which is due for delivery in April? Will I be eligible, or would you advise me to cancel delivery and negotiate a new order in April? Unfortunately, with the super deduction, there are already anti-avoidance legislation out there, and it is all about items or plant and equipment. I've got to make sure you say this right. So it's plant and equipment, qualifying plant and equipment at that. And it has to be qualifying plant and equipment after the April date. the whole point of the scheme is to try and invest in new investment. So if you think about that's what the scheme was intended to do, you can understand why the rules are in place that it is only for qualifying equipment after the 1st of April. So if you do have that opportunity, it does make sense for you to be able to get that order so it's actually showing that it's completely in the April deadline. And that's just to protect yourself. You may well get away with it with the kind of the way that you're talking about the fact that it's only delivered after April and everything else. But personally, I wouldn't take the risk. There is an anti-avoidance legislation already been built for it, already in place, and it is something that we need to make sure that we have everything in place for it. So what I would say, or what I would suggest in your case, is if you have the ability to go around and be able to put that information into if you have the ability to renegotiate that deal, I would highly recommend doing that one, because I think that's going to be something that is going to help you and give you that extra benefit that it's all about. And it is a huge benefit to have. 130% on the cost of it is going to make quite a big difference going forward. I've got time for one more question, and that's from Joshua from Twitter DM. He asks, "Hi Aaron, I just signed up for QuickBooks a month ago. The cash flow planner sounds great. Good work on that. Can I make edits if I know it will be higher or lower than predicted?" Great question there, Joshua. And this is exactly what the cash flow planner is all about. First and foremost, it's going to make sure that you have predicted it for you without you doing anything, which is the whole point of a cash flow planner, giving you the opportunity to see exactly how your business is doing. But then, yes, it does give you those tools in place to be able you to add and ask for everything that you need to go and ask about. So the idea then is you can put edits into there, you can add transactions, you can go in and see if there's more income that's due, more expenses that might be done. And also it looks to see if there's any trade debtors or trade creditors you might not have taken into account. So if you've got an invoice that's due to be paid, or you've got a bill that you need to pay later, it's going to look at them as well and bring them all in. The best thing is about all these adjustments that you might put into the cash flow itself. So if you are going to be making those edits and having a go and looking at those scenarios and everything else, the best thing is they're all contained within the cash flow forecast planner. So you're not going to affect any other of your QuickBooks. There's going to be nothing in there that's going to worry about or amend for VAT returns or anything like that. It's all going to be based directly in that cash flow forecast, giving you the chance to be able to make sure that you're understanding exactly how your business is going to be affected by anything that could be coming forward. So I really do recommend that you have a go. One thing you have to make sure you've got available for that cash flow forecast is you have to have a bank connected. So as soon as you've said yourself, Joshua, you've got yourself connected, or you've got yourself QuickBooks about a month ago, do make sure you have your QuickBooks connected to the bank. And then once it's connected to the bank, that's the information QuickBooks is going to be using to be able to understand what your cash flow forecast is going to be. And it's going to be able to start predicting that information going from there. So get your bank connected up, have a look at the cash flow forecast, and ultimately have a play with it. It's a great piece of solution, a great piece of software, and it just makes using QuickBooks that a little bit more beneficial for every business out there. And with that, I can't believe it, another half an hour has gone by, and that's the end of the show. So we did ask you for some poll results, and the results are just coming in now. So the poll results we asked for you was, have you ever sacrificed anything for your employees? And a staggering 100% of you said no. So that's a great reply there in terms of seeing if any sacrifice has been made for your employees. You know, that's quite a huge amount there of the no camp. And that kind of makes sense in this day and age, doesn't it? When we think about what's going on with the pandemic and everything else, we're all having to make sure that we keep our employees as happy as we possibly can. So with that then, it is time to do the wrap up. So thank you for tuning in this morning. If you want to get in contact with me, then send a message to hello@boffix.com. More than happy to answer any questions. And also going over to my QuickBooks channel, ask a comment in there, and I'll also get back to you from there. So coming up on Asset Expert tomorrow, we've got a great one. We've got Laura Hitchcock, owner and editor of Blackmore Vale Digital Monthly Magazine for North Dorset. Laura is also the founder of Little Stuff, award-winning lifestyle website for parents and teenagers. And if you've ever watched any of her Ask the Experts before, you'll know exactly how good that content is. Tune in to learn how to master content creation. I certainly will be. Can't wait for that one. And don't forget to join the official Intuit QuickBooks SME group on Facebook. Accountant and business experts just like myself are on hand 24/7. And with that, it's great to see you all. Stay safe, and I'll see you in the next video. Bye for now.